Welcome to the Pirls Stock Market Commentary for market week ending Friday, October 24th, 2014. Market breadth. With this past week's market advance, our bull-bear point and figure ratio rose from 0.43 to 0.77, still in bearish territory. The total count of securities in bullish or bearish patterns fell 2% to 2,425. The count of bearish stocks increased 21%, while the count of stocks in bullish patterns increased 42%. The Pirls PNF Market Breadth Summary Chart shows us a market now 5 weeks in bearish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, and clicking Sign Up. For those who are interested, a free 2-week trial subscription is available. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 206 points for the 11th advance in 21 weeks. At a negative 573.87 points, it continues below all 9 tops above plus 100, continues below the May 2014 bottom, below the December 2011 bottom, below the August 2014 bottom, below the July 2012 bottom, continues above the May 2012 bottom, has risen above 2 more of the 7 bottoms below minus 100 in the last 35 months, the November 2012 bottom, and the newly formed October 2014 bottom. Market Gauge Volume Analysis. In this week's volume analysis, the Nasdaq 100 Trust ended in neither accumulation nor distribution mode. In the last 2 weeks, it had 0 accumulation days and 0 distribution days. Of the other indexes, both the Diamonds Trust and the S&P 500 Deposit Receipts ended in neither accumulation nor distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq 100 Trust also ended in neither accumulation nor distribution mode. Momentum. The CCI 20 Daily now has 4 consecutive days above 0 for a potential Woody's trend change next Tuesday market close. However, at plus 73.97, the CCI 20 Daily is above the plus 50 outside the range for a valid zero-line reject entry signal. In Woody's CCI trading system, 6 consecutive bars above or below 0 are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 16 weeks ago, while the daily CCI 20 began a Woody's downtrend 3 weeks ago. At minus 25.90, the CCI 20 weekly has 3 consecutive days below 0 and is now within the plus or minus 50 range for a valid zero-line reject, should one occur. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and only one of the bottom 5 is negative. Bullish, semis, computer hardware, and disk drives have entered the top 5. Oil continues in the bottom 5. Networkers has left the bottom 5. Gold and silver has left the top 5, entered and leads the bottom 5. Bearish, banks, and S&P retail continue in the bottom 5. REITs has left the top 5. Focus this week from www.zerohedge.com. The financial health of Europe is not looking good. ECB announces stress test results. Here are the 25 banks that failed. Quoting from the article, in the new normal, more bank failures means more bailouts, means the richer get richest, means more wealth inequality. The central bank's punchline, quote, "The exercise delivers high level of transparency, consistency, and equal treatment. Rigorous exercise is milestone for the Single Supervisory Mechanism starting in November," end quote. The important part being that not even Goldman is buying the reported negligible capital shortfall. As Bloomberg called it, the ECB has staked its reputation on Monday's stress test results. What reputation? Failures concentrated among Italian banks. Some quick observations. Not a single major bank failed the stress test, and the cumulative capital shortfall among the 25 failures is precisely 25 billion francs, less than the 27 billion franc shortfall reported during the 2011 stress test, when 20 banks failed, and when Banco Espirito Santo, Dexia and Bankia all passed with flying colors. Oh, and just in case it was lost the first time, the Bank of Cyprus supposedly passed. More amusing, among the banks that failed, one after another are already lining up to comment that they already are, quote, fixed, end quote. And the punchline, while the 3 Greek banks failed, they all passed on a dynamic basis. In other words, if one excludes reality and replaces it with this curious state known as dynamism, all is well. So nothing more has to be done. So they say. Thank you for tuning in for this week's Pirls Stock Market Commentary. Hoping that you are enjoying a pleasant and peaceful weekend, that you have a great week coming up, and wishing you true success.